Piercing line. The piercing line candlestick pattern happens when a bullish candle closes above the midpoint of the previous bearish candle. This shows buyers regaining confidence. In this example, sellers push price down first, but buyers recover more than half of the losses, showing increasing bullish strength. Morning star. A morning star is a 3-candle pattern showing a transition from selling pressure to buying pressure. We see a strong bearish candle, followed by a small indecision candle, then a strong bullish candle. This shows sellers losing control and buyers taking over. 3 white soldiers. This pattern consists of 3 strong bullish candles in a row. It shows consistent buying pressure. Here, price moves upward with 3 consecutive bullish candles, indicating strong bullish momentum and trend continuation. Dragonfly Doji. A dragonfly doji forms when price drops significantly but closes near the opening price. This shows rejection of lower prices. In this example, sellers push price down, but buyers recover all losses, suggesting strong demand at lower levels. Tweezer bottom. A tweezer bottom forms when 2 candles have nearly equal lows. This shows strong support. Here, price tests the same low twice and fails to break lower. This indicates sellers are unable to push price down further. Bullish Harami. A bullish Harami candlestick pattern occurs when a small bullish candle forms inside a larger bearish candle. This shows weakening selling pressure. In this example, the strong bearish move slows down and price begins to stabilize, signaling a possible bullish reversal. Hammer. A hammer candlestick forms when price moves strongly downward, but then recovers and closes near the top. The long lower wick shows strong rejection of lower prices, meaning sellers lost control and buyers stepped in. Here we can see price in a downtrend. Sellers push the price lower, but buyers quickly buy it back up. This shows buying pressure and can signal a potential reversal to the upside. Inverted hammer. An inverted hammer candle shows buyers trying to push price higher after a downtrend, but sellers are still present. This candlestick pattern suggests selling pressure may be weakening. In this example, price has been falling. Buyers attempt to move price higher, creating a long upper wick. This indicates early bullish interest and a possible trend change. Bullish engulfing. A bullish engulfing pattern forms when a strong bullish candle completely covers the previous bearish candle. This shows buyers fully overpowering sellers. Here, price is moving down. Then a large bullish candle engulfs the previous candle. This shows a strong shift in momentum toward buyers. Shooting star. A shooting star forms when price moves higher but gets rejected strongly. The long upper wick shows sellers stepping in. Here, buyers push price upward, but sellers quickly push it back down, showing rejection at higher prices. Hanging man. The hanging man looks like a hammer but appears after an uptrend. It signals potential weakness in buying pressure. In this example, price is trending up, but strong selling appears during the candle, signaling a possible reversal. Bearish engulfing. A bearish engulfing pattern forms when a large bearish candle completely covers the previous bullish candle, showing strong selling momentum. Here, buyers lose control as sellers fully engulf the previous candle, signaling a shift to bearish momentum. Evening star. The evening star is a 3-candle pattern that signals a transition from bullish to bearish momentum. Here, we see a strong bullish candle, then indecision, followed by a strong bearish candle. This confirms sellers taking control. Dark cloud cover. Dark cloud cover forms when a bearish candle closes below the midpoint of a bullish candle. This shows increasing selling pressure. In this example, buyers push price higher, but sellers reverse most of the move, signaling momentum shifting downward. 3 black crows. This pattern consists of 3 strong bearish candles in a row, showing consistent selling pressure. Here, price declines steadily with little buying reaction, confirming strong bearish sentiment. Gravestone Doji. A gravestone doji forms when price moves higher but closes near the opening price. This shows strong rejection of higher prices. In this example, buyers attempt a breakout, but sellers erase all gains, indicating strong resistance. Tweezer Top. A tweezer top forms when two candles have nearly equal highs. This signals strong resistance. Here, price tests the same high twice and fails, showing buyers are unable to push price higher. Bearish Harami. A bearish Harami candlestick pattern occurs when a small bearish candle forms inside a larger bullish candle. This shows weakening buying momentum. In this example, the strong bullish move slows down and sellers begin to step in, signaling a possible reversal. Spinning top. A spinning top forms when a candle has a small body with wicks on both sides. This shows indecision in the market, where neither buyers nor sellers are in control. In this example, price moves both up and down during the candle, but closes near where it opened. This indicates uncertainty and a possible pause or reversal in the trend. Long-legged doji. A long-legged doji shows strong volatility with no clear winner. Buyers and sellers both push price aggressively, but neither gains control. Here, price makes large moves in both directions, but closes near the opening price, signaling strong indecision in the market. Marubozu. A Marubozu candle has little to no wick, meaning price moves strongly in one direction without rejection. This shows strong momentum. In this example, price moves strongly from open to close with no pullback, showing full control by buyers. Rising 3 methods. This is a bullish continuation candlestick pattern, where a strong bullish move pauses briefly before continuing higher. Here, price moves up strongly, then forms small bearish candles within the range, before continuing upward, showing buyers remain in control. Falling 3 methods. This is a bearish continuation candlestick pattern, showing a pause in selling before price continues lower. In this example, price moves down strongly, then consolidates briefly, before continuing downward, confirming bearish momentum. Inside bar. An inside bar forms when a candle stays completely within the range of the previous candle. This shows consolidation and reduced volatility. Keep this in mind. Candlestick patterns do not predict the future, but they help traders understand market psychology and price behavior. They work best when combined with support and resistance and overall market structure. If you want to learn how to identify the most important support and resistance levels, I've linked a video you can watch next. Thanks for watching, and I'll see you in the next one.